morning, everybody. How are you all doing? Sorry, my camera went all jerky then. Morning, Evil. Morning, Danny. Morning, Sarah. Morning, Jury. How we doing? Happy Tuesday? Wednesday? Tuesday. I don't even know what day it is. How we all doing? Morning, CK. Morning, FTNet. How we doing? There's lots of different light blue badges now. We've got lots of light blue badges as well as the dark blue badges. It's always good. Morning, Travel. So this morning we're going to look at the strategies that we've been working on, basically, which have set live trading, just to see what they've done. Interesting findings, I think we will find this morning. Morning, Vitali. So obviously it's early days, it's only been trading for a day, but want to look at basically how the EA is executing. So whenever you develop a new strategy, part of it is obviously live trading it, forward testing it to make sure that it works as expected in the back tester. So we'll have a look at how the strategies have executed today. I was working on some a day of daily strategies. I've done a load of testing on daily strategies, and while I can make daily strategies very profitable, not very profitable, but profitable. The problem with daily strategies is if you make them very profitable. Sorry, I was just picking something stuck to the side of my mouse. Child's been using it. The problem with daily strategies is they don't take many trades if they're good daily strategies. So the best daily strategies, I think, are the ones that execute every single day. So there's two different types of daily strategy. One of them is a setup type where you are waiting for an RSI to get extended and then you take a short trade. So you sit there for days and days, and in some cases weeks, waiting for a setup to take a trade, and that trade then either works or it doesn't. The better types of daily strategies are a bit like this, the opening range breakout or SIH strategy, where you stop loss didn't cancel on one of those trades then. Why did that happen? So this type of strategy where it's just taking one trade a day, but it takes a trade every day, and those are the ones that we've been developing. So the ones that we've been working on are the types of daily strategies that I like, where it gets in every day based on a rule set and sees if the market can make a profit out of that particular setup. So we'll go through them this morning. I've got them all running on the VPS. Let me just launch the VPS. There we go. And we'll go through those in a sec. Today's news, basically, we've had the claimant count change come out this morning, which was 26.7. So that's slightly better than forecast, but it is up. So looking at the pound pairs, they're having a little bit of a negative reaction this morning. Nothing particularly extensive, though. So pound coming down this morning. Everybody else will be sitting there all confused saying, why is there a green number and it having a negative effect? Obviously, because unemployment has gone up. It was 10,000. Now it's gone up 26. So, yeah, not good. That's all for news today. So there's no other news today. It all kicks off tomorrow with the CPI numbers. So that's the main thing to look for tomorrow. Overnight wise, nothing else exciting tonight that I could see. So all pretty boring. Morning, wish check. I prefer calling you that because that's more fun. Right, so there's your news covered. Opening range breakouts today. No trade on the DAX. A cock up on the FTSE. For some reason, that stop loss didn't get removed. So I've only got one long on and now two shorts, which I don't mind because it's gone short. So it's kind of a hedge, but it's not a hedge. So I'm going to have to deal with that one manually today. Well, we're either going to have a go at the monthly low or we're not, aren't we? I'll keep an eye on that one this morning, but monthly low. So DAX, no trades on the DAX. Again, if you're trading SIH or ORB at the moment, you may have noticed that there's been a lot less trades this week since the Trump election. Main reason for that is the SIH strategy uses a dynamic range based on ADR. Obviously, with what's happened here, the ADRs are out. So we had that massive movement intraday, which has bumped all the ADR numbers up. So it's the EA is finding it difficult to find a Goldilocks zone within the ranges at the moment. This will all start to calm down as we get on a couple of days, but no trade on the DAX again this morning. As you can see, the volatility is very low today anyway, but you could take that. It's 294, minimum range is 296. I've had that a few times, like yesterday on the US indices. Didn't get anything on yesterday on US indices because the ranges were all wrong. So it's a bit of annoyance at the moment. It just throws that movement has just thrown the ADR calculations out. But it only happens for 10 days because obviously ADR 10 is what's being used. So so we'll see if that breaks short this afternoon. We'll have a look at that in a minute. I've still got no exposure on. I can't get any. There's no trades at the moment. There's nothing setting up. We had a couple of ADRs yesterday. There's nothing so far today. Nothing's hit 125 ADR, which is where I'd kind of look to get in. RSI wise, the only setups yesterday were things like this on Euro US dollar, where we got ADR hits to the downside. These are being filtered out now by the swap filter because I don't really want to go long because it's too expensive to trade. I want to go short. So I'm going to monitor this for a week, say a week. I might not even give it a week. One of the consequences of using the swap filter, which I didn't really think about, but now is very obvious, is you are going to miss half the setups. So we are set up for longs here at the moment. Yeah. So that trade will play out over maybe the next 3 to 5 days, meaning that I'm not going to take it. I'm going to be sitting there waiting to get into a short because that's the only way it's going to go. So I've kind of eliminated half of the directional bias trades by using a swap filter. It's going to help me financially and it's going to help with the direction of the trades, hopefully. But it's also going to mean that there's going to be a lot less opportunities. So I'm going to give it this a couple more days, basically, to see if we get, first of all, there hasn't been many ADR setups, but I'm going to give it a few days to get some ADR setups in. So pound US dollar is set up at the moment for a long. I'm only going to be trading that short. US dollar Swiss at the moment is set up for a short. I'm only going to be trading that long. Yeah. Because the swaps are too expensive to short it. So it seems that this swap filter, to me, is almost acting like a cot bias in the fact that the market wants to go in that direction because obviously they are also paying swaps, yeah, at a much bigger state. You know, this is what the US dollar yen carry trade is all about. You only long it because they pay you to long it. You have to pay to short it. So I'm thinking possibly that this is going to have an influence on direction a little bit. It's not anything I've ever looked into, and I'm not sure there's a way to actually test this, back test this, because I don't think there is anywhere that publishes historical swaps. Brokers obviously must have this data, but I don't know if it's actually published. So interesting. So if I haven't got any signals set up by maybe Thursday this week, might even look at tomorrow, I'm going to have to start taking some manual trades. So for me, obviously, RSI is going to be a little bit of a trickier entry mechanism to use. I've set the EAAs up on the VPS now to use ADR as well. So on the VPS, on the position trader account, which is this one, I've got the position trader EA set up to take ADR reversals or RSI extensions. And the ADR reversals I've set to 125. RSI is the hourly 70-30. So just to give me that opportunity to get into some more trades, because if we get an ADR hit to the upside here, I'm not necessarily going to get an RSI extension, but I do want to get in short on it. So if I haven't had anything trigger, I'm going to start looking at propulsion gap plays. and support and resistance plays, just to get some exposure on, because obviously I can't make money with no risk. So I'm in a bit of a new territory in the fact that I'm being forced to trade in a direction. It's a little bit like using a moving average bias or a COT bias or a scorecard bias. I'm just using a financial bias in the fact that it's going to be cheaper to trade in that direction. But obviously it does filter out half your trades. So anyway, we'll monitor that. If there's any pairs you want to look at, by the way, just let me know. There's no RSIs today. The only ADRs that are really decent extensions are US Swiss and pound US dollar. So pound US dollar, move that down a bit. Pound US dollar is a long setup. We've just had negative news come in on the claimant count, obviously, for the pound. So we are starting to break out of that little monthly, weekly range that we've been in for the last 2 or 3 weeks. And the US dollar Swiss is rallying at the moment. So there's a nice looking short opportunity there. Got fairly decent double top resistance coming up around about ADR today. So if it does continue to push up from here, that's going to be quite a big extension that they're going to want to pull back on. So there's an opportunity for shorts there. But, you know, short cost for me is 14.60. It's too expensive. I don't really want to trade it. Anyway, so yeah, we'll have a look at this first. We'll do some, if anybody's got any pairs I want to look at, and then we'll go on to look at the strategies that have executed overnight. I watched yesterday's live stream where you discussed about the possibility of monthly reversal strategy. Monthly reversal strategy. Oh, support and resistance. Yeah. I would love that. Taking an untouched zone with M5, M15 reversal alerts. We could try that. I mean, I'd use a moving average entry rather than reversal alert because it's more consistent. But we can try that. I can build an EA for that. I've got some support resistance EAs built. The problem with support resistance is I never found an edge using stop and take profit. But I didn't really look into it in any detail. Since I found position trading, and I think a lot of people are like this, somebody else said this to me as well in Telegram. Since I started position trading, every stop loss strategy I ever look at, I just look at it and go, it's not going to work. Because I've tested and built so many models on stop risk reward based strategies that I can see the Achilles heel in every single one of them, and they always fail long term. So every time I look at anything, I'm looking for something that I can position trade with. And the problem is when you use a support resistance, like a monthly high, for example, yeah, and you try and apply a risk reward or a TP based exit to it, you find it just you'll have a bit of luck and then it won't, and then it'll be all right, then it won't for some reason, then, you know, and it stagnates. And this is this zero-sum game that we're in with longs and shorts. The only thing that really works with any strategy using risk reward is something that has a very high strike rate, which means you have to really pull back on the number of trades and take a triple plus setups. But obviously when you get to a level, monthly or weekly, there either are or there aren't limit orders there. So the odds are still like that, 50-50, aren't they? But there is more chance of a bounce at the level than not, because there usually is orders at that level. But that level will quite often break anyway when we hit it. So it's the key to trading support resistance bounces for me is trying to find an amount of distance that you can bounce at the vast majority of the time. So like you say, if we can get half an ADR of a bounce, just scalping those, but you might only get 1 or 2 trades a month, if that. Yeah. Which means that you've got to use very high risk on them to actually make them worthwhile doing. And if they don't play out, you've got to have some kind of stop mechanism. And as we know, support and resistance isn't a line, it's an area. So you have to come up with a mechanism within here for taking a trade. It could be above it, it could be below it. You know, limit orders can trigger below the level. So you have to draw a zone around it. When you draw a zone around it, you increase the stop distance, which makes it harder to achieve that half ADR, risk reward ratio. So it becomes problematic. And when I've programmed the logic for this, I've tried various different logics for trying to get in, trying to get out, trying to use risk reward around it. And I've never found anything that has got a real big edge over anything else, because it's random. When every time you get to a support and resistance level, it's random. This one here, obviously it blew straight through it because we had a news event, which is no use. But this low here from that month, yeah, we got these two areas here, which they rebought this level. But it's this level they're rebuying, but they're not buying it here. So you've got to find a way of zoning the levels, which becomes complicated. And then you've also got the other thing with that, which I found very difficult to overcome, which is I've got a monthly level there, I've got a weekly level there, I've got a weekly level there. These two zones, these three zones overlap. So which do you use and how do you use it? There's so many variations of rule sets, like this weekly low, this weekly low, and this weekly low is one massive support zone here. But you need to recalculate and redefine it every week. And I couldn't find any obvious logic for using a zone around this level. So for example, if you look at this one here as a low, the next week we exceeded that low. So if you'd have drawn a zone around that of a quarter of an ADR or half an ADR or something, you'd have got a lovely little trade in there. But then this one happened. So you then keep that area and you extend your zone around that and you get in long somewhere in here, but you'd have got stopped out on it. And then there was a second opportunity to get in, but would you use that then? You know, there's too many calculations, knock-on effects, and discretionary elements using support and resistance. So if someone can come up with a set of exact rules, I can test them. But when I was trying to sort of define the rules, I found myself questioning myself every time. I would go and constantly go, right, okay, well, I'm going to use the line and I'm going to use half an ADR around it. And then I'd see something happen and it would be, that would move 3/4 of an ADR and then bounce. And I'd be like, okay, I'll extend it to 3/4. Then I found that the stop was too big. So I thought, well, that's too big. I need to drop it down to 1/3 of an ADR. And every time I changed it, it worked in some cases. And then other cases it failed. So I ended up coming back with this P&L that, as they all do, come back to a 0 at the end of it after a long period. Very, very difficult. But discretionary wise, you'll see something happen, and that will be what triggers you to take that trade. It'll be a price action happening. You'll see a candlestick pattern at a support area, and that will be the reason you take that trade. But it's not something you can define. Hindsight wise, that looks great, doesn't it? And as a retest out of propulsion, that looks great. So I'd probably place a pending order above the high in that case and see if I got a break on it. But sometimes I wouldn't use a pending order. Sometimes I use a market order. But that's a discretion. It's very hard, very, very hard developing logic. Everything looks really simple. When you go and backtest something and you look back in history, you're like, well, it's obvious, isn't it? You short it there. It's very obvious, but define me a set of rules that means it gets in with the right entry there. That's very hard. Yeah. And next time we break through that level, take some longs when we retest it. Very hard to define the rules to get in. Anyway, I'm diverse. I'm going off on one. Aussie dollar Swiss, Vitaly wants to look at. We'll quickly look at that. Let me just quickly check. So we're breaking short on FTSE. It's going to be a bit of a break even that one today, I think. Yeah, I mean, Aussie Swiss was a nice entry up there. Again, there's a perfect example. Look, that's the weekly high. That's kind of the high before it. And we came up to this area and we came out of it beautifully. But I can see that in hindsight. I would take a trade there, but I wouldn't use a stop loss on it. I'd see how it worked, how it played out. And then what I would do is go, well, if that doesn't work, I'll get in again up there, average in and get out. It's position trading. That might actually be a good exercise to do. This is a perfect example, this Aussie Swiss, of just using the buttons to position trade, but using the buttons to position trade and then basically waiting and checking it every day, or have we got to a new level and scaling in that way. Right, this is basically how I used to do it before I built all the EAs. I used to do it all manually, which is how I teach in the position trading bootcamp. It's all manual because it works. Anyway, right, Aussie dollar Swiss. So there's more targets to the downside on this at the moment. There's no bias. I want to be long in it because it's cheap. I don't want to be short in it. But that was a lovely trade out the highs there. Can't really see anything to do with it at the minute. It's just sitting in the middle of nowhere. More likely, I think, to go short and come down and fill these propulsion gaps to the downside. We're bang in the middle of the range at the minute. So that is your double monthly high. You've got 2 monthly lows there. One or the other, isn't it? But more likely downside to come and get these propulsion gaps filled, I think, first, and then potentially up. But I don't know where this is going at the moment. The Aussie's probably going to reduce its interest rates. The Swiss franc does what the hell it likes, doesn't it, at the moment? So, but from a financial perspective, if you short this, just bear in mind if it sits around and does this for 4 weeks, it's 820 to hold it. It's too expensive. It's not too expensive. It's just a lot more expensive than if you were to go the other way. I would much rather get an RSI extension and wait for them to fill these propulsion gaps and then long it out of the propulsion gaps. For me, that's a better trade at the moment. I think this thing is going to confuse me a little bit. Not confuse me, but is going to create an unconscious bias in my mind, because I will see setups like this and think that's a lovely looking short. And I'm worried I'm going to go, I ain't getting in it. I'm not going to take it. And I'm going to miss all these beautiful trades. It's slightly worrying. But also on the back of my mind is the fact that I just spent 30 grand on swaps. Yeah. That's like 2 years mortgage payments on swaps just for trading. I can't ignore that either. So I'm having a bit of a quandary at the moment. Anyway, so yeah, don't know really. I'd be more interested in shorts than longs on that one. My POS trader doesn't show my swaps. Is it on new version? Yes. Version 1.71. Those are good zones to start with, like we do with the RSI and the ADR. Yeah, so I mean, this is the thing. This is partly why I introduced these buttons into the position. This is why I built the position trader EA. It is the position trader EA. It's not the RSI extension EA. It's not the ADR reversal EA. It's not the market reverse alerts EA. It's the position trader EA. It is for position trading. The idea is you take a trade. If the trade doesn't work out, you wait for another entry and then you wait and get out in profit. Yeah. So this is no different to what I always used to do. And if you don't use RSI extensions and don't use ADR extensions, look for decent support resistance levels. There's a double monthly high. If this thing gets up to there Friday, yeah, I'm going to hit that button. Or am I? I don't know now. This is the trouble. But that is a great place to hit the button. Yeah. And if it doesn't work out, go out a level and see where we're going. Yeah. So if you take a short there and that doesn't pan out, I mean, you've got a lovely up here, which is going to be about 5 ADR away. But, you know, if they've gone up to there and it's going to go parabolic 5R up, this is the yen intervention. Yeah, it's not going to go parabolic 5R up unless something really weird kicks off. But, yeah, So take a short, wait for it to push up. At some point, it's going to pull back on a leg before it gets to that high. That's your exit. Yeah, nothing to do with RSI, nothing to do with ADR. In fact, at the moment, with the way that RSI and ADR has been performing, I mean, ADR has been performing beautifully, but RSI hasn't been performing as well over the last sort of 6-8 months because we've had so many squeezes. If we get an RSI extension here and you short it and it doesn't work out, that's the better place to short it, isn't it? Because there's more chance of you getting a kick off of that. Maybe we should be looking at scrapping oscillators altogether at the moment. But you know, this is the stuff that you can't test. This is what trading is all about, getting in and getting out. How you get in is irrelevant, isn't it? Maybe we should be scrapping RSI and just looking at support resistance bounce plays and anything that's got decent setups. What I don't want is too much distance between the resistance I'm trading and the next resistance because there's no reason for it to turn here at all. In fact, there's no reason for it to break that level because it should be bearish, shouldn't it? But anyway. Right. There we go. So we've waffled on for half an hour and I haven't even talked about what we're meant to be talking about yet. But if you want to talk about anything else, just jump in. Right. So let's look at how these strategies have played out. So what I've got set up is, let me just position this so that we can see what's going on. That'll do. So this is the fib pullback strategy. Okay, so I've got this running on all the yen pairs and all the Swiss pairs. Yeah, so the idea of this strategy is to replace the yen pairs and the Swiss pairs in position trading because they are expensive to trade. However, if I find a really good long opportunity on a Swiss or a yen, I might well take it because the swaps are really good. But at the moment, I haven't been trading Swiss and yen. So the idea of this strategy is to try and get into those pairs. So what it's doing, as we covered, let me find one with an open trade. There we go. Is we are waiting for 9 o'clock. Yeah. If the pair closes within, I think I've got it set to 40% of the high. Yeah, 40% of the high. There's a pending order placed at 20% of the ADR. Yeah. So basically what's happened here with this US dollar yen is we've had a big update. We've pulled back. We've closed within 40% of the high of the day. And we've placed a pending order 20% of ADR below where we close at 9 o'clock. It's not where we close, it's at 9 p.m. So an hour before the close. Yeah. Idea being behind an hour before the close is we're not going to get ridiculous swaps. So that pending order is placed. As you can see, we haven't reached it yet. It's a buy limit. So we've got an order sitting there waiting to be triggered. And then basically, if we get the order triggered, off we go with a trailing stop of half an ADR, and we're looking for 1.5 ADR as a TP. Yeah, so that's the strategy basically. So as you can see, we've had overnight 5 orders triggered, and we've got other pending orders in place. So US dollar yen didn't quite get in, but it's triggered nicely. The order, well, the EA is triggered, but obviously the order hasn't triggered. Aussie dollar yen, there we go. So that was the 9 o'clock candle. It's within 40%. We placed the 20% ADR pending order. We're triggered long. Yeah, target is going to be beautifully at the high, and the stop is there. So the stop always goes at the low of the day. Yeah, so the stop is always placed at that low. Reason being is this is a trend strategy. If we're going to trend, we are not going to invalidate that low. Yeah, if market structure is going to happen in any shape or form and we are going to trend, we won't break the previous low, will we? Because if we break the previous low, the trend is over. So that's where the stop loss goes. And then as the trade starts to progress, we trail by half an ADR. So we are basically, if we don't manage to get to that target before the trend ends, we're going to stop out with whatever profit we've got. Yeah. So that one has triggered. It's in play at the moment. CAD yen has also triggered. Pushed up. There's your 9 o'clock candle. 20% of ADR, triggered entry, looking for a push up. Stop loss is already trailing. Okay, so this one is a good example, already trailing. Look, so that was the initial stop loss at the low. We've reduced risk already because we triggered the entry. There. And then pushed up. Right. Now, this is the problem. This is what we're going to look at in a second, right? Look at where this has triggered. This is already started trailing, which means that this didn't trigger. This triggered almost immediately as that pending order was placed because of spread. We're going to look at this in a minute. I took a screenshot last night of the spreads. This is where the Achilles heel is going to be in some of these strategies, I think. There was no trade on the Swiss yen, basically because can't quite see it. Let me just move it up a bit. So there's no trade on the Swiss yen because that was the 9 o'clock candle. Yeah, that was the range. So we weren't up in the top end of that range, basically. Pound yen, no trade triggered. New Zealand yen, no trade triggered. And again, now this one, look at where this 9 o'clock candle is. That's easily within 40%, isn't it? But at 9 o'clock last night, the spread on this thing was immense. Yeah, I took a screenshot of a couple of the spreads. The reason the EA didn't trigger an order there was because the ask price was not within 40%. It was miles away. Yeah. So the problem with triggering at 9 p.m. on yen pairs and specifically New Zealand pairs is that spread is absolutely vast. Let me just open a screenshot quickly and I'll show you a couple of these spreads. These are screenshots I took last night because I checked it. You probably can't see the spread very clearly, but this is 9 o'clock, just after 9 o'clock actually. Yeah. So that is the spread on the US dollar Swiss. Yeah. This is the other strategy that we're going to go into in a minute, which is that scalping strategy that gets in at 9 o'clock and gets out at 1 o'clock in the morning. Yeah. Ain't going to work because we're looking at, when we ran all the back tests on these, we're using 2 pip spread. Yeah. I tested it also on a 5 pip spread, which is a big spread. 2 to 5 pips. That's a big one. That is huge. Yeah. That is a quarter of an ADR. 20% of ADR is something. It's ridiculous. Yeah. This is the spread that you're dealing with at these times of night, which is going to make any back testing done with these virtually useless. So what we need to do is rerun some tests with massive spreads and see what the impact is on the P&Ls. There's another one here. This was the CAD Swiss, right? Look at this spread. That's your day's range. That is the spread when we are trying to trade. Yeah. This order, this buy limit order here, needs this line here to be down here to trigger it. The candle is below that line, but look where the order is going to be executed. Yeah. So when you're back testing, what you're watching when you're back testing is candles moving up and down. And you're like, there's a pending order there. The candle gets to it, triggers it, and off it goes. In the real world, the candle could be here, but the ask price, the price that you need to trigger the order, is up there. It ain't getting anywhere near it. So half of those trades we looked at on these strategies that trigger at this time of night are never going to execute. And this is a prime example. And this is normal. This is all brokers. So this one here, candle looks like it's a perfect one. We'd have put a 20% of ADR pending order. It would have triggered beautifully, and it's going to go off and it's going to hit our target. We make loads of money in the back tester, not even going to trigger the order. Yeah. So not sure about these. And if you remember when we were looking at these strategies and Froggy came up with, I don't know your real name in here. You guys, by the way, did you know in Discord, you can change your names in Discord so that they show the same as in YouTube? Yeah, so if you go into your user settings in Discord, sorry, not the user settings, into the server settings, you can actually change your name for each server to be unique. So on the server, on the Market Structures Traders Discord server, you can change your name to the same as in there. So I know who the hell I'm talking to. See, Vitaly is Froggy. But Vitaly, change your name in there to Vitaly. So I know who I'm talking to. Yeah. So this is where I think the problem is going to occur. And we'll look at Vitaly's strategy in a sec, which is triggered. So this one didn't trigger an order. This Euro yen didn't trigger an order because it was bang in the middle. US dollar Swiss has triggered a buy limit, but we haven't got to it and it's off without us, which is fine. And what it's going to do is it's going to shut that pending order after 48 hours. So I'm going to give it today to come back and I'm going to give it tomorrow to come back. If it hasn't triggered it, we're going to scrap it, restart the cycle again. Yeah. So I think this strategy specifically, the trend pullback strategy, because what we're looking for is not to have the low of that day broken, I think this will probably still hold up. So the results are going to be different, but what we're doing here is we're looking for basically an intraday pullback continuation. There's a good chance of that happening. Whether we get our orders triggered or not, we don't know. But today, if we get down to there, look at the spread now. Look, the spread now is that. Yeah. So if we do get down here daily, intraday, we're going to trigger them. So when you're doing your back testing visually, if you see a candle within the first 2 hours of the day trigger that order, in real world, you're probably not going to get that. If you see it trigger during the London session, you will get that executed, or New York. It's only this gray zone at the swap where you're just not going to get these orders triggered. Or you might get them triggered without price actually touching them because the spread goes so wide. So New Zealand dollar Swiss, oh, brilliant. Look at that. So fairly big spread on New Zealand dollar Swiss. There always is because it's a New Zealand dollar pair. We didn't get triggered. So need that to come down a bit further. But look how far away the stop is on it. Yeah, we got loads of breathing room on this. So when we get into these trades, we know are taking days and days and days to play out. So it's not an issue. We have got to think about swaps. There we go. So we've triggered a buy there on the CAD Swiss. So we closed up there. You can see the spread candle there. Look, that's where we closed. That's where the market spread to. ADR on this is 402. Spread on this is over a quarter of an ADR. Over a quarter of an ADR, they spread it. Yeah, this is what we've got to deal with at this time of day. Aussie dollar Swiss triggered a buy. Obviously, these stops are going to be in different places dependent on the size of the day. So this one had a fairly tight stop. It's also already triggered a bit of a trailing stop on it. So we've reduced the risk. So basically what we're looking for is trigger my trade. If it starts to work, reduce the risk. Yeah, so we're reducing the risk as the trade starts to play out. We're hoping for a nice, big, strong continuation in trend to get us up to the targets. Pound Swiss, no trade there. And Euro Swiss. One of these is stopped out. Pound Swiss. So the Pound Swiss was actually a stop out. Yeah, let me just plot that. There we go. So there you go. So there's the Pound Swiss. So that was the day. We pulled back within 20% at 9 o'clock. We placed our, within 40%, we placed our 20% of ADR pending. Pending order came down and triggered nicely. So the spread would have been nice and tight there. But it's just collapsed. Obviously, we've had news. And what we've done is we've hit the low of the day. Stopped out. And obviously, limit orders are now triggering off that low. But we've stopped out on that one. So there's 120 loss. Yeah. But we've got 4 trades on and we've got other pending orders ready to trigger, haven't we? Yeah. So that's that one. This is going to be less affected by the overnight spreads than some of these other strategies. So I'm going to give this, a week or two to play out and see how it develops. It's going to be a bit of a slow burner because it's a trend trading strategy. What we're loving and hoping is that's going to happen. What's going to happen in reality, though, is that, isn't it? Yeah. So how long it's going to take for the market move to continue, we don't know. So I would expect the hold times on these to be sort of multiple days, week or so, maybe. The other strategy is the lazy trader strategy. Only got 2 trades triggered on this overnight. New Zealand dollar yen being one of them. Yeah. Order. This uses a market order, so it gets in immediately. So what I wanted to see on this was where the entry was, and the entry was exactly where I was hoping it would be. So the spreads were quite tight here, meaning we got an entry at that candle close. That's going to be the important part. Morning, Harold. So unfortunately that one stopped out. Oh, sorry, that one hit TP rather. So it made money. So TP hit on that one. The other trade we've got on is the pound US dollar, which I wouldn't hold up much hope for. So that one is obviously in drawdown. Now, obviously with this strategy, what we're doing is opposite to the trend pullback strategy. We've had a big, strong push down. It's within a percentage of the close to the downside. So we take a long order looking to TP on the pullback. So opposite of what we're doing on the other strategy. The other strategy is looking to get in on the pullback. This one is looking to get out on the pullback. If it doesn't work out, we're going to take an additional trade here, average in and exit the position. Yeah, so we'll see how this plays out. The thing that's worrying me about this one is half these trades haven't triggered. So here is our day, and here is our 9 o'clock candle. Now that for me is well within the range that we set, which was 40%. But it didn't trigger an order. And I think that is probably because of the spread. Now, I've got a feeling when I've coded the EA, I've used the ask price. What I think, I need to look at this morning, but obviously you've got a bid and an ask price. I may have to adjust long orders to use the bid price and short orders to use the ask price, because that's what you get. Yeah. Sorry, the other way around. Because if the spread is wide, that price there is not going to be within 40% of the range. So I think it's probably that has stopped it triggering. I'm going to need to put some logging in. But this didn't actually take many trades. Yeah. So that one there. So that's right not to have taken a trade. Aussie dollar, US dollar. That's right not to have taken a trade. Euro pound, in fact this might actually be right. Yeah, euro pound, not taking a trade, which is right. So actually it's not bad. The 9 o'clock candle is there. So the range on that was 9, call it 1,000. That was tight. You see that one there is 35. We should be taking trades within 40. So the spread on that probably would have just tipped it over. So it just didn't take the trade because the spread was ever so slightly over, which is fine. That one, that's a tricky one. Yeah, that's probably spread related as well. Odd CAD, that's fine. That shouldn't have traded. Now you see that one should have taken a trade in theory, shouldn't it? Look, so the range was 1221. The 9 o'clock candle was there, which is 200 away. So that's well within 40%. Why didn't that take a trade? Got to be to do with spread. So I need to just look at the logic on this just to test it, because it may be that the bid and ask prices need reversing on it. Same with that one, probably should have traded, because obviously here we're trading, we're not trading yen and Swiss pairs, we're trading normal pairs here. That one wouldn't have taken a trade. So there's a couple of anomalies. That one definitely should have. It closed at the high, look. There's no reason why that should not have taken a short. That CAD Swiss. So I'm going to need to put some logging in it just to check it, and I'll do that today. That one would have taken, that one I think should have taken a trade as well, look. But it didn't. And that one would have been a TP. So yeah, so overall, it's taken a couple of trades. That one's worked out nicely. We've got one running on the pound US dollar, which is going to turn into a position trade. So obviously with this strategy, it takes the trade. If the trade doesn't work out, it turns it into a position trade and tries to exit at break even plus commission. Yeah, so that's worked fine. A couple of anomalies I need to iron out on it. Now, Froggy's strategy made a $479 loss. Yeah, so this is trading. I've stuck this basically on virtually all pairs. Yeah. To see basically what it does and to test, you know, the logic and how it works. Yeah, so you can see some of these trades here. So what we're doing is we're getting in at the close of the 9 o'clock candle. Yeah, so you can see the 9 o'clock candle closed there. In the strategy tester, that's where our entry would be. In real life, that is where our entry was to buy. Yeah. Then the market gapped down and the spread would have been something ridiculous. Don't know what it is. I didn't take a screenshot of them all. But this one stopped out, which is fine. So 2 hours later, it stopped out. And that is where we got the execution of the stop, which was pretty much spot on. Yeah. So the exit at 1 a.m. looks good. The entry, however, at 9 p.m. is not where it should be. We should have taken that much loss. We actually took that much loss. Yeah, spread caused a big differential. Got this one here. That's the close of the candle. That's where our entry should have been. That's where we actually got entered, and we got out at the close of that candle. Pretty much spot on. Yeah, didn't hit TP. Would have done on the next candle, but we didn't because we're closing out after 1 hour. But yeah, you can see again, there's a big discrepancy with entry there because of spread. CAD Swiss, don't think that traded. CAD Yen. So the entry on that one was actually pretty good. Exit in profit. But look, that's where we should have got the profit. What we actually got was that because of the spread. Yeah, so spread is a massive, massive problem with this particular strategy. Spread there is 2 pips. Yeah, so that's about right. About what we did in testing. That one didn't trade. Euro odd. Quite a lot of these didn't take trades. There we go. That's one there. So that one there, obviously, that's our entry. We got out there with a profit, but we should have made that much. We actually made pretty much a break even on it. But good job we got out, because if we'd have waited, we'd have made a massive loss. Pound Swiss, short entry. Not a bad entry on that. But look at our exit, right? There's our entry. There's the close of that candle. That should have been our exit. That should have been the P&L on it. What did we get? That. Price was nowhere near it. Spread. Huge. Yeah. So you remember what I said when you showed me this strategy, Vitaly, that I've seen a load of these strategies. There are hundreds, there have been hundreds of these strategies put up on the marketplace on MQL5. And there's a lot of people teach these strategies. On paper, they're fantastic. Actual execution, you will get nothing like the results. That doesn't mean that they won't work, but it means you will not be able to rely on any backtesting results. The reason those equity curves look so beautiful is because we've given it perfect trading conditions. You give it crap trading conditions, that equity curve will not look like that at all. So this one, I'm going to let it run for a few days because I want to see how it executes. But I think you'll find some of these pairs will probably be okay to trade, but some of them just won't. Like your entry, look, is just nowhere near the strategy tester entry. Exit, pretty much spot on, but it's the entries you're going to have a problem with on these, I think. So that one didn't trade. No trade there. New Zealand, Swiss again. So good entry on that one. But look at what happened, yeah? We closed here. We opened down there. That was your spread. So they spread it by 10 points. Quarter of an ADR. Quarter of an ADR spread. And then they got us out where we should have got out, plus a little bit. A couple of pips, which is fine. A couple of pips is not a problem. New Zealand dollar yen didn't trade. New Zealand dollar US didn't. US dollar CAD didn't. US dollar Swiss. Yeah. So there's that one there. Nice entry. Pretty much spot on where we should have been. Exit should have been there, but not far away. So not bad. So, you know, deviation is a big thing with this strategy because of the swap. And there's absolutely nothing you can do about it. The other problem with this strategy is if you give 10 people this strategy, you will get 10 different results returned because every broker's swap and spread is different. Therefore, what you're going to be doing with this strategy is every Wednesday you're paying 3 times the swap fee. So overnight on a Wednesday, this strategy is going to be a hell of a lot more difficult to make money out of. So you kind of don't want to get on Tuesday nights because you're basically paying triple the cost of trading just to trade on a Tuesday. So you need to skip Tuesday and get in on Wednesday. Yeah, but you're going to have a swap there and you're going to have obviously spread. If you do have a broker that uses commission as well, you've got to include commission charges. And because you're looking to target such a tiny amount of money, I just think the deviation in the strategy results is going to be so wild. But like you said, try putting a 4-hour exit on it. Yeah. Instead of making a profit, I'd have made a massive loss. It's this bit, yeah? What you need to do is you need to get in 2 hours earlier and you need to get out 2 hours later and get rid of this period of time. Yeah, there's so many, there's EAs out there on the marketplace you'll find that are called the swap scalper and the Aussie destroyer and things like this. They all do this. They don't work because you don't get the trading conditions. The trading conditions every night, if you go and look at the US dollar Swiss, right, over the next week, or any pair, Aussie New Zealand, right, go and look at it every single night, and just before the close at 10 p.m. take a screenshot, and if you're still up at 11, take a screenshot, right, and compare the spreads every night. They will be dramatically different every night. They are wild, absolutely wild. You're never in this period of time here going to get the same trading conditions on 2 days. There is absolutely no way to replicate that in testing. You have to forward test it. This one here, if you used your 4-hour exit, whoops. Yeah, instead of taking that loss, you took that loss. And this is the problem with it. If the longer you delay this exit, the whole idea of this strategy is it's a scalping strategy. We're looking for 0.1 ADR, tiny target. That's all we're looking for, this tiny little target. But we have an uncapped downside. So the trades that don't work, if you look at the P&L, this is the P&L down here. Yeah. The trades that work are $18, $36, $90, $30. So strike rate, we've got 4 winners, which is good. We've got also 4 losers, $95, $244, $124, and $40. So although the strike rate is 50-50, which you'd expect, any strategy is going to get a 50% strike rate because it can only go up or down. Yeah, we know that. But the downside being uncapped is huge. So we took a $244 loss on the pound New Zealand trade. Yeah. And this is before the news came out. Yeah. You can't target something that's going to generate $30 of profit and then take a $240 loss on one trade unless you've got a strike rate up in the 75 to 80% range, which in back testing, this has got 60 to 70%, which is not bad. It's very good. But in real world trading, you're just not going to get the profit, unfortunately, I don't think. But we'll test it. I'll leave it running and we'll see, see what it does. It's a really interesting experiment. Not one that I've actually run before because I've live traded these strategies, like just live traded these, and I've done automated trading on them, but mainly I started off live trading them, and I realized immediately they weren't going to work because of spreads. But that one that works over a short period of time isn't good. But we can adjust this exit criteria, can't we, to be 4 hours. But I mean, I'll do some testing on the 4 hours. But the problem is, you're giving yourself, if you get in with a 4 hour delay, you're giving yourself more time to hit that target. But if the price goes against you, you're giving it more time to get away because you've got a capped upside of 10 ADR, 10% of ADR, and you've got an uncapped downside. Imagine if the Australian interest rate came out, which it will do at 3 o'clock in the morning, and it went against you. You could be 1.5, 2 ADR loss and just targeting a 0.1 ADR profit. Those days are going to wipe out a month's worth of profit in one go. Going to kill the strike rate. So you'd have to watch news and just go, right, is there any Australian news? Like tomorrow morning at 12:30 a.m., yeah, you've got the wage price index on the Aussie. First of all, you don't want to be taking trades tonight because you've got a triple swap tonight. Secondly, you don't want to be taking trades tonight on any Aussie pairs because there's a chance that could go miles against you. Yeah, you could use a news filter. Yeah. But then you're adding another variable, aren't you? So, or you're also now, if you're using a news filter, you're filtering out all the profit travel, aren't you? Yeah. So every single one of these news events that went in your favor, you're not getting that profit now. You can't backtest any of this. This is the trouble. All these strategies that look good on paper, like I say, it's the hunt for the holy grail, right? I have been doing this 17 years. I have found thousands of strategies that look amazing. You trade them, they fail. Why? Because they're curve fit. This is curve fit. And it's also unexecutable because of trading conditions. If you could find a broker with a fixed swap, like TD365, for example, you could execute this strategy with exact trading conditions. Unfortunately, there is no MT4 broker that does that. So you'd have to trade it on their own platform, which means you can't automate it. So it'd have to be done manually. So if you can stay up from 10 o'clock till midnight, you can trade this. And you can then decide, shall I do the Aussie because there's news coming up, yes or no? And is the swap, well, the swap will be good because it's a fixed swap. They'll give you. And don't do it on a Wednesday, So I don't know. But I'll leave it running and, it will either prove us right or wrong, won't it? And it's only day one. So it's not the end of the world, is it? Ignore that percentage there because I haven't set the dashboard up with the actual balance. The other thing you need to do with this as well is using a fixed lot size is no use because you're going to get a different return on each one. If you're targeting a 0.1, we need to be using a monetary risk over a distance so that we get the same risk on every single trade taken, because some of them are going to generate massive profits, but those ones that don't work, that are using high risk, are going to generate even bigger losses, unfortunately. So overall, this one looks like it's going to struggle, not because of anything wrong with the strategy, just because of the trading conditions. Just not going to be able to get what you get in the back tester. However, the lazy trader strategy isn't going to be affected by that as much because it's not using a stop loss, and the pullback strategy isn't going to be affected by it too much either, because the stop loss is absolutely miles away. And we are trying to play trades out over multiple days. So this one I think has got good potential moving forward, and the lazy trader one I think has got good potential moving forward. This one I think we'll just struggle with, but we'll run it. We'll see. You never know. Triple swap unless you long the Swiss and the yen. Yeah, so there's an argument for with setting it long only on Swiss and yen pairs. So euro yen, just come into the common tab, set it to long only. And if we've had a down day, we will go long, but we won't go short. So you could try that, because you're automatically going to earn money overnight, aren't you? So if the trades work out, you're going to earn lots more money. If the trades don't work out, you're going to cancel some of that loss out with the positive swap that you receive. So that might be an option, is using a directional filter. So you can use a position trader EA to find the swaps, but it's $2.20 to go long on the Aussie Swiss, $8.20 to go short on it. So long only Aussie Swiss. So we will only buy down days. Yeah, so we just buy down days on the Aussie Swiss. Aussie yen, we just buy down days, because we're going to earn $5 swaps. We're going to cost $17 swaps to go the other way. So just go long. But this is what these strategies do. These, you know, these ones that I said about the swap. There was one I think it was called Swap Harvester or something along those lines. And its job was basically to just try and gather positive swaps. And it works. It does gather positive swaps. But how it gets in and what price action happens over the period that it's in the trade is what doesn't work. So the one that I remember looking at, basically what it did was it identified one candle before close. I think it worked on, is either the 5 or the 15 minute. I can't remember which. But it identified one candle before close, and then it closed one candle after open, right? And in the back tester, it was like the equity curve was literally like that. It was a line. And it was also gaining positive swaps. So it was basically not making any loss. I think it waited to get 1 pip or 2 pips worth of profit, which over that period of time is going to happen. So the equity curve looked like that. It also made money on positive swaps every night. So it was like, on paper, it was like, holy crap, this is the holy grail. When you actually try and execute the order on that strategy, what you actually get is that. Yeah. I can't execute the order there, because that's where they're going to execute my order. So I've got to wait for price to move that far just to get back to break even. Doesn't work, does it? But their P&L and back test and the strategy logic was like, holy crap, what an amazing idea. No, it's not, because you can't do it. It's the same as these HFT. You see a lot of EAs out there now called HFT. So it's the prop firm HFT scalper. And what it does is it gets into multiple trades really fast, waits for it to get up, and then it's brilliant. You can't execute them. First of all, there's spread involved. So you're never going to get the price that is executed. Secondly, your broker's not going to execute the trades fast enough for it to build that tiny little grid for you, because the delay in order execution is going to be too slow. Thirdly, brokers that identify HFT trading increase swaps on the account to make sure that you can't HFT trade. So you can't execute them. On paper in the backtester you can, on demo accounts you can. Stick it on a live account, your broker will widen your spread. Yeah, so there's a lot of these types of things out there you've got to be very cautious of, because they theoretically they work. But it's like with any science, isn't it? You get theory, you test theory, it explodes, and you go, theory was sound, practical wasn't. Yeah, and it's the same with this. So, but we'll give it give it a week, and we'll see how it plays out. So I'm going to let all those runs. I need to just double check the bid-ask logic, because obviously spread is going to be a factor in all of these. So I need to make sure that we're trying to get in at the right prices. I've got a feeling on my strategy, the pullback, the trend pullback one, I think I've got the logic the wrong way around on it, maybe, because some of those should have triggered and they didn't. So I'll look into that. But you know, this one, obviously we're giving ourselves loads of time, because we're saying, right, you've had a bull day, let's get in on a pullback long. Yeah. So this is going to be one that's going to play out over days, which the spread is just not going to affect it. So there you go. So that's the initial findings. Anybody got any questions on any of that? Cool, look, we've done an hour. Good, isn't it? Gutted. I missed an exit on the FTSE. I'm just going to pull my stops back a little bit because I've got trailing stop at 2R and I should have got out down here. 103 in because I've got a single long and a double short. Obviously, it's broken the right way for me, which is lovely. But I can't work on a standard risk reward on this. So release the lazy EA for the members. I can't because it's not. I've got to test it first. I can't release something after 1 day of testing. Needs to be tested. If it works, yes, we will definitely. But you can't. I need to see it working. With it, when you develop an EA, not so much a strategy, but an EA, yeah, you've got the idiot factor. Yeah, GIGO. We talked about this the other day, didn't we? Yeah, garbage in, garbage out. Yeah. In the back tester, everything works fine. In live forward testing, you will look at trades and you go, why didn't that trade? There's something wrong with the logic. You don't discover logic problems until it's live trading. Yeah. There's restrictions within MT4 live trading that you don't get in the strategy tester. So it has to be forward testing. So I need to be able to test this on a daily basis and go, right, that didn't take a trade. Why? I think it should have. So I need to go into the logic and go, why did that not trade if I think it should have? Or it did something weird. Why did it do something weird? So you've got to forward test these things. And unfortunately, the trouble with this strategy is, unlike most strategies which work on candlestick patterns, oscillators, indicators and things, I can run them on the 1 minute chart and go, let's pretend this is hourly, because the markets are fractal. Indicators do the same thing on all time frames. So I can run it on a 1 minute chart and get tons and tons and tons of trades executed as if they were hourly. With this, because it only triggers at one time of day, I've got to forward test it live. There's no way of replicating this in live trading environments because it has to work at a specific time of day. So this trade here, for example, yeah, that's the range, that's the close. Why did that not go long? Yeah, so there's something wrong there. But what I will need to do is at 9 o'clock tonight, I will need to be sitting here watching this and going, why is this not trading? And if it's not trading because the spread is like that at 9 p.m., I know that is the reason. And there's nothing wrong with that, because we don't want to get in when the spread's like that, do we? Yeah. And if the calculation has been taken from there, and it should be taken from there, I need to adjust the logic. So I've got to test this. I can't just chuck something out there and go, here you go, have a go, because it's just not going to work, is it? We've got to make sure it's robust in its functionality, as well as the strategy being robust itself. Otherwise, there's no point. I can chuck it out there and say, here you go, everybody, you can have it for 50 quid. But all you're doing to do is give me 50 quid. And then I've got something else to look after that doesn't work. So I want to make sure it works first. There's no point in releasing crap. And obviously, I want to use it. Yeah, if I'm going to put this on live money, I want to make sure it works, because I don't know if any of you have ever done this, but bought an EA from the marketplace and immediately your account has disappeared, or it's gone down by 20%, or it's gone down by half, or it's just blown, or whatever. Yeah, you have no comeback. You will say, this EA just blew my account. MQL5 will turn around and go, talk to the author. You talk to the author and the author goes, you got a problem somewhere. Yeah, and you just end up going around in circles. Yeah. So if it's not going to work on my account, I'm not putting it out there, basically. Because it needs to work. Did you do a session about how to get out of SIH hedged positions? Kind of, yeah. Every time I get in, basically, don't I? I mean, for me, it's 5R or a support resistance level. There's not really anything I can do. So this hedge, so for example, this one here today, if this was a proper hedge, and it's not a proper hedge because something's gone wrong with the stops not being deleted on one trade for some reason. And again, this is another thing. The logic on this EA works like this. Place pending order using stop loss. Calculate risk lot size based on stop distance. Place order, cancel stop. Yeah, that's the logic. It goes through steps in that order. For it to do a stop loss removal on one trade and not the second one, there has to be an interruption in the EA's operation. That is caused either by your computer, your terminal, or your broker. Yeah. This you cannot replicate. This will never, ever happen in the strategy tester because the strategy tester runs through the logic exactly as it should do. Something this morning, you saw this trade trigger and a stop loss get hit on that trade. There's no reason that stop loss should have got hit because the stop loss shouldn't be there. But something happened. This is a needle in a haystack. You can't find this because the logic is literally do this, do this, do this, do this, repeat. Do this, do this, do this, do this. Yeah. At some point it's done that and gone, I can't be arsed with that. What has? Who has? You know, this is stuff that just happens every now and again and you can't get around it, unfortunately, because it's usually a blockage in the terminal or something. But yeah, with this trade here, for example, this morning, that's 5R. I would just literally look at where's ADR for the day. Have we got any decent resistance? Yes. Okay. So I will move this down to here because I'm expecting if we break long to find resistance at this monthly level as we have many times. Yeah. So I'm expecting limit orders to trigger there. So that's where I will get out of the longs and then go short. But that's it. There's nothing clever. I'm not being I'm not doing anything special with it. There's not really a point in doing a session on it. It's basically look for support resistance. Support resistance is discretionary. For me, that's a monthly level that is strong support and has turned strong resistance. It's also yesterday's high. It's also ADR. If it goes to that level, I've got yesterday's high, ADR, and a monthly support. That's probably the turning point. If it isn't, it's not going to work. I haven't got anything more clever than that, unfortunately. That's it. Simple. But that's kind of the session. There isn't, there's nothing else to do. So for a short play like this, a short hedge where we've got 5R sitting down here, and we've got this is too close to get out because it could blow through to ADR, and if it breaks that low, it's probably going to pop. If it pops, I'm just going to leave it at 5R because I've got nothing, there's no support resistance for me to use as a limit order bounce. All I'm looking for, all I'm always looking for is where are the bank orders sitting? Yeah. Yeah, they're short there. They're short there. They're short there. Yeah, that's all I look for. Because if they're short there, they're probably going to stay short there. This is why support resistance works. This previous area here of resistance held and got broken. Then it turned into support. Then it broke. Then it turned into resistance. If we get back to that level, We know the banks are using that as a pivot point. So when we get back here, there's a high probability of a bounce. Now it could bounce and blow through. I don't care. As long as it does that, I'm out. That's all I need. I need a bounce. I don't need it to turn and drop. I need it to move off of that level. That's all we're looking for. We're looking for reaction. So this, we've got a reaction at. The reaction's not been very big so far, but it could be bigger. And if that happens, I'm going to take a loss. I can't do anything about it. If that's where they're buying from and they're going to continue to buy from it, I can't change it. We can't change what the banks are doing. Where the market moves is completely out of our control. We can get into a trade and we can look for areas to target. They will either work or they won't. You don't have anything more complex than that in trading. It's binary. It goes up, it goes down, it moves through time, it moves to levels. That's it. You can make 1 billion strategies out of those 3 facts. That's all there is, though. Literally all there is. Everybody's trying to be super complex. If it moves that much above there, it means it's a stop run. Therefore, place your stop loss there, blah, 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 blah. It's a resistance bounce. It's just not accurate. Yeah. That, and that is all the same thing. It's an area that they have been buying and selling at. I have no idea whether it will hold, and I have no idea where the bounce point will be when we get back to this area, if we get back to this area. No one knows, because the balance of orders when we get back to this area is not going to be the same as the balance of orders here in the past, because it's the future. It's totally new. Every day is new. There's new order flow every day. There's new orders placed in the market every day by different participants with different values. There's absolutely no way to predict the future. This is what everyone's trying to do. Everybody's trying to pick the turning point, pick the entry. The entry's got nothing to do with making money. The entry is just a place where you press a button. That's literally all it is. You can come up with 1,000 indicators that will tell you to press a button, but the button press is that or that. That's it. Isn't it? It's just, but it's not until you've been through 100 strategies and you've realized they all do the same thing. They try to predict where to enter the market, but it's not what you concentrate on. You concentrate on getting out, because getting out is where the money and the loss is taken. Getting in is just where you get in. It's got nothing to do with making money, is it? So when I'm in, I'm looking for where I'm getting out. I'm always focused on targets. Every position trade you see me take, I'm focused on targets. I'm looking at where is price going? Why am I getting out here? Yeah, why is my exit there? Because of that. Nothing else. I'm in. I can't do anything about being in. I'm in. That's it. It's like people say, what's your position on the US dollar CAD? Short. Where from? Just short. I'm expecting it to come down. Where to? There. Why? Because of that. That's it. And it bounced. Look. It bounced there, though. Not there. And it moved that far before it collapsed through. Yeah. But what did we get? A bounce. You'll always get a bounce because there's limit orders there. We know there is, because that's where it bounced from. You can't make that happen without buy orders. When there's buy orders in place and an area, they are trying to make money on that move. If it gets back to it, they won't stop trying to make money. It's the same as us. If we are short the market and the market moves above us, we short it again because we're short. They're long. They will long it again because they're long. It's just because they are long, they long it. Because we're short, we short it. We do the same thing until we exit with a profit. The banks do the same thing. They will long it and they will hope that there's not more banks going the other way. If there is, they will get out and they will then short it with the banks that are going that way. You're just following flow of orders. It's like water. You just follow it. But you can't predict it. Yeah, you get a river going one way and it hits a fork. If you're in a canoe, yeah, and you're not paddling, you're going left or right. You don't have a choice. The river makes the choice for you. This is the river. You get on, you press the buy or the sell button. You don't have a choice which way it goes, but you do have a way to exit. That's all you have. Nothing else. So you just look for Where are they selling? Here. Great place to get in. But if you target here, the probabilities of that happening are not as much as the probabilities of that happening. But I've no idea what is going to happen with it. But look at the last 2 times they sold it there. Yeah. But it could just come to here and then do that. It's an ascending wedge breakout to the upside. Don't know. One technical analyst will draw that. Another technical analyst will draw a triple top, can't say it, M pattern reversal. But both of those analysts are seeing the same chart. They also have no idea which way price is going, but they can try to predict the future. That's all you have, is trying to predict the future. You basically enter and you apply a risk mechanism to future price movement. The risk mechanism either plays out or the risk mechanism fails. That's all you've got. Like I say, flip a coin, get in. If it works, get out. If it doesn't, get in again. That's all you can do. Adjust your price. Yeah, because if the price isn't where we want it to be, move it to where you want it to be, closer to where price is now, so that it gives you a chance of exiting. And as I say, all the market does is that, isn't it? As long as it does that, and you've got your average price close enough to where price is now, you've got half a chance of getting out of it. It's just obviously we know we've got things like swaps that cost us money. I thought the EA just takes trade at 11 o'clock regardless of where the price is. No. Wick size, as you've just said, yeah. So there's a wick size filter. And obviously, I'll have to look at the logic. And this is the thing that I'm not convinced on, that I've got right. And if it isn't, it's... it won't affect testing, because when we're testing, we're using a 2-pip spread. So the difference between the bid and the ask on the tester is nothing. The difference between the bid and the ask here is not nothing, is it? It's massive, right? So if I am taking the calculation from that line on being within 40% in this case of the high, the difference between having the calculation from that line and having the calculation from that line is the difference between the EA going, yes, it is, or no, it isn't. Again, it's binary. So I need to check whether I'm using the bid or the ask. I've got a feeling I was using the ask. And if I'm using the ask on both of them, that's probably not going to work if we've got huge spreads. But again, I'm never bothered about spread, really, because I don't trade strategies typically that spread affects. Scalpers worry about spread. I don't do that. So, but the only time I do scalp is here. And the spreads are always pretty tight because we've got more volume than the whole day going through at that point. So the spread is tight because we've got high volume. Low volume, high spread. High volume, low spread. Yeah. So when we're scalping at the open, we've got a tight spread. Never been a problem, is it? We don't have spread at the open. News you do, overnight you do. Yeah. So this period here is the period where London's shut. New York, they're pretty much all gone home. New Zealand haven't got to work yet. Yeah, we've got the lowest volume session of the day, which is Japan. Yeah, this is why the spreads are so massive there. There's just no volume. 90% of the volume goes through London and New York. Yeah, they're not awake. This is where the problem lies. Evil, I'm manually testing every night at 11 o'clock chart time. I check how the daily candle is. If it meets the requirements and enters the opposite direction, I do this 10 pairs or so. On the VPS, I have the POS trading EA set up to take profit after 0.2 ADR and not to take other orders. If the target is hit, good. Otherwise, the next night, I take another position. Yeah. Isn't that what I've built this to do, though? Am I missing something there? So you're using the position trader EA to do this. Yeah. Travel. I do not know. I'm always searching for this razor sharp entries. Yeah, that's where you're going wrong. You're focusing on the entry. Don't focus on the entry. More than often it bounces, but as you always say, and how to get out of the trade makes money. There I struggle like hell. Yeah, so it's exit. Your exits are. So just take this one. Right, so this is a bit of a different exit. The reason I exited this was because the election was about to come and it was profit, right? But that is where the initial target was on this trade. Yeah. If you struggle with exits, one of the easiest things to do, one of the easiest things to use as an exit is a fib. Yeah. So fib works. Look at that. Absolutely spot on. It's just coincidence, but it is absolutely spot on. 38 retracement. So when you are in a trade, it doesn't matter if it's a trend trade, and it doesn't matter if it's a breakout trade. It doesn't matter if it's a mean reversion trade. It doesn't matter what type of trade it is. Yeah, market structure exists everywhere. Price has a starting point. It moves in one direction. It then pulls back. If it's going to continue in the direction, it will not break the high, lower high. We then have a lower low. Yeah. Then it will pull back. And if it's going to continue in the same direction, it will not break that high and it will make a lower high. Then it pushes back and it will go to try and make a lower low. If we don't manage to make a lower low, we make a higher low, we are then expecting to push back up again. Yeah. Every single one of these moves is a Fibonacci ratio. So if I am, I don't know, let's just pick, I'm long here, right? If I'm long from here, okay, the easiest way to pick a target is to stick a fib from that high to that low and go, okay, if this is going to continue that direction, I am not expecting it to break that high. Therefore, whereabouts should I exit? I've got in long here. So I would put a fib on that. Now it's made that low. And I would say, okay, that is a 23 retracement. That's a 38. That's a 50. That's a 61.8. And that's a 71.9. Okay. So if I'm long from here, I would probably say somewhere around the 50% retracement of that leg is a good target. If I want a quick exit, I'll go with a 38. If I want a super fast exit, because I'm not sure about the trade, I'd go with a 23, because the market will only do one of two things. It will either continue that move or it won't continue that move. There are only two things it can do. Either continue market structure or go into a range or reverse. And it is part of that pullback. Yeah, that's all that's going to happen. So if you use a fib, it's really easy. Stick wherever you get in, you go for one of these fib ratios and look at it in this way. Super cautious, cautious, comfortable, aggressive. I think this thing's reversing. Yeah, somewhere in that range, the market, if it's going to continue in a bearish market structure, in this case as it did, it will reverse. And in this case, it chose the 50. It might choose the 61.8, the 71.9, or the 38. But if you get in there, does it matter? You're going to make profit. Your job is to make profit. Your job is not to get the reversal point correct. Your job is to get out with a profit. So if you get in there long and it moves down and you get in there long, your average price is there. Your target is 50. Because you can't get out at 38 because that's where your price is. You can if you want to, but it's just a break even. Nothing wrong with taking a break even. What have you lost? Nothing. What's everyone else losing? Everything, because they're using stop losses. We're not. So just use fib ratios. The easiest way to exit. If you see a fib ratio line up with a propulsion gap, Yeah. So as we were coming down here, there's a propulsion gap here. There's a propulsion gap here. So those two together are one big propulsion gap. Yeah. If you see a fib ratio, in this case, the 50 lining up with a propulsion gap, assume that because there's a large bank order there, they're going to add. If they're going to add, you want to get out. If you see a fib ratio lining up with a previous area of support and resistance, in this case, the 61.8, target that. Yeah. Confluence. All you're looking for is you're trying to guess, and there is absolutely no way of predicting it, where this market is going. If it goes in your way, the only decision you've got to make is if it goes in my way, where am I getting out? If it goes against me, where am I getting in again? That's the only decision you've got to make in position trading. I enter the market, I press the button, and I wait and see what price does. If it goes my way, I look for where I think it might go and I'll get out. That is not a 2-to-1 risk reward ratio, $600, $1,000 or $200. It's a level. Whatever that is an amount of money I take. It could be 1,000, it could be 200, it could be 150, it could be anything. But what I'm looking for is to get out and put money in the bank. I'm not looking to get out with $1,000. Everybody's focused on risk reward ratio because they're using a stop. We're not using a stop. Therefore, there's no risk reward. We are looking to get out with profit. How much profit do we make? Whatever is there when we get there. Yeah. If we think the price is possibly going to turn at this point where it got stuck, which happens to be a 50% retracement at a propulsion gap, we'll get out. How much money is it? Depends where you got in. But it doesn't matter. We're getting out with profit. The focus of everybody is finding the strategy that works the most, picking the turning point in the market the most accurately, having the biggest risk reward ratio so that you make tons of cash, having a high strike rate of 70% because it makes me look amazing, makes me feel good getting it right all the time. None of that makes you money. It may give you a nice placebo effect and your brain goes, oh, I'm really good at this. But you look at your P&L at the end of the year, it won't be positive. What you need to do is get out of the market when the money's there. Yeah. The P&L is green. Take it. You can spend it. Yeah. Who cares if you're right? I get out of my trades, virtually all my trades. And I've said this so many times in live streams. I get out wrong all the time. Every once in a while, I'll get out at the right spot, but there will always be more on the table. But if I hold this, that causes me fear. That causes me greed. That pays my mortgage. Big difference. Yeah. I got out of this US dollar CAD way too early. I got out there with X thousand. I could have got out there with twice as much money, but I needed to get out because the trade was going wrong. It had cost me money and I needed to get some of my losses back. That's the reason I got out there. But it's not because of anything but that. Because that is the last week's low. It hit last week's low and I was like, I'm scared to death of this bouncing. Yeah. People see me as I don't know if people see me as a confident trader. I'm not confident at all in anything that I do because I've proven to myself time and time again, I get it wrong all the time, but I make money. That's the difference. I don't want to be right. What I want to be is profitable. I'm not interested in getting the exit right. Just trying to find a trade that's really wrong. It's a bit difficult at the moment because obviously the news with Trump has skewed everything a little bit. I haven't really got any trades there. So I'll give you 3 guesses. Yeah, it's roughly a 50% retracement on that leg because it could do that. It didn't, and I left a little bit on the table. I think that was probably my target, that propulsion gap, because I normally target propulsion gaps. But I took it off because there was a load of money available to me. But what it did the next day was push up back into the propulsion gap there, sit around, move down, move up, move down to there. I could have taken off way more money, but I would have had to sit through all of my profit disappearing, reappearing, disappearing, going into massive drawdown, reappearing, and then going into that much extra profit. That's greedy. That is money. That's the difference. This is why I make money, because I take money. I don't take the glory. The glory is irrelevant. The greed is irrelevant. Yeah. But fib is your... I don't believe in fib retracement entries. I find them impossible to get right. You can't get it right because it's never the same. Sometimes it will do a flag break, which is a 23 retracement. Sometimes it will do a shallow pullback to a 38. Sometimes it will be there, or there. It doesn't matter. It's somewhere around there. But sometimes it will come down to roughly 50%. And sometimes it'll be a really deep pullback in the next leg, which should be 61.8, 71.9 or longer. But it won't make a new lower low down there if it's going to continue that way. But I have no way of knowing what it's going to be. But what I do know is my break even's there, and that is money. That's all I'm interested in, taking cash. And this is why I say in the position trading bootcamp, get in with tiny profit. Just get in with a 0.01. Yeah, take a trade and then get out when you've got a profit. Show yourself, prove to yourself that this market moves up and down. If people could prove to themselves that the market just goes up and down all the time and that you can make money by pressing a button at random, everybody would find this so much easier to do, because all you do is you wait for the market to move up and down. That just takes time. The one thing you can't control is direction, but you've got time. You've got unlimited time. That's one thing you have on your side. But direction is impossible to predict. Levels are impossible to predict, but we can see where the banks have moved from. They didn't sell here for any other reason than that's where they sold last time. That's it. They didn't buy it here for any other reason than that is where they bought it last time. Yeah. So when we get down to this level, they'll probably buy it. When we get up to this level, they'll probably sell it. But they may sell it here as they did last time. Levels. If this is profit, take it. Don't go, I want more. Take it. Just build the P&L. But don't be focused on building, you know, this is why I have different amounts. Every month is different. Some months I make a loss. Some months I make a win. Some months I have a 25% gain. It's not because I'm better or worse. It's because the market had to go further to get to a target I'd set. Therefore, I made more money because it had nowhere else to stop. If you see, was it Aussie Yen we were looking at? Yeah. So if this breaks out of this area here and goes up, where's it going to stop? There isn't anywhere. Look, it just came parabolic down. Yeah, there's nothing but clear air. So if I go long here, there's nothing to stop it. It's likely to get all the way back up to there because market structure is now bullish, sort of. I mean, it's just a mess, isn't it? But there's nothing to stop it. So I wouldn't set my target there because there's just no reason for the market to turn there. Always looking for where the market is likely to turn. That's where you're either going to get in or you're going to get out. When you see a range, never get in there because you've got a 50-50 shot of it doing that or that. There's a much higher probability when you get to a level of it bouncing. So take a trade there and sit on your hands until you get there. If it doesn't get there for 6 weeks, you sit on your hands for 6 weeks because there's absolutely no reason to get into a trade unless you want to flip a coin, in which case, fine. It could go that way. It could go that way. But if you go that way, get out there. Don't go, oh, I'm going to go for 7 grand. If that is 1.5 grand, that's what you take because there's a high probability of that happening. It's that simple. But everybody, I think, in trading, and I was the same for many years, is looking for the mechanism that happens all the time. There is nothing that happens all the time. No 2 days are the same. No 2 weeks are the same. No 2 months are the same. No 2 levels are ever respected in the same way twice. But you just got to look for the levels. That's it. Hopefully that makes it clearer. But the simplest thing to use is this bad boy. Because if this is just a market structure measuring tool, yeah? If it's going to continue that way, it's going to do that, or that. If it's not going to continue that way, it's going to continue that way. In which case, it's going to break that high. Unless you know which of those two things it's going to do, you can't predict the future. You just have to be in it and hope you get one of these right. Yeah. And this is what position trading is all about. It's getting into a position, then adjusting yourself. So if this goes down and it's not going to do that, I can get out. If it goes down and it's going to do that, I just wait for it to come back on its way to do that. And that is my exit. You're just adjusting your positioning in the market, waiting for it to get out. But you've got to have a way of, you've got to have an exit. Look at the US dollar CAD and this monster move that we've had put in. Take a screenshot of this. Take a screenshot of this and come back and tell me whether this happens in the future. I mean, that somewhere around there, yeah? If the US dollar weakens in the next month or the run up to Christmas and you short it from this point here, one of those levels will get hit. That's my prediction. If the US dollar rallies, it's not going to hit those levels. That's all I know right now. But if I short it now, I'm looking at this here because it's a 23 retracement and that is a flag break. Or I'm looking for a pullback. And I don't know how deep the pullback will be if it's going to continue, but it's going to be somewhere around there. If you're short on this still, and it is going to pull back and undo this leg, that's where I'd be looking. Now, if that is 20 grand profit, that is 50 grand profit, and that is 90 grand profit, I'm taking that. Because if it does that, I'm still in trouble. If it does that, yes, I could have made 3 times the money, but I don't want to be making 3 times the money. I'd love to, but what I want to be is not losing money. Focus on not losing money rather than making more money, and you will just make money because everybody's focused on getting it right. Don't focus on getting it right. Focus on making money. That's the difference. A mindset adjustment. Hope that helps. That's the way I look at it anyway. But not saying it's right or wrong. It's just a different way of viewing the market. Since we can't use the lazy EA on live demo, I do it manually for tests. Yeah. This is exactly my problem, like 90% of retailers. Yeah. Don't get me wrong. It was my problem for many years, many years. I system hopped for a decade. Not quite that. But a long time until one of my mentors slapped me around the face and went, "What are you doing?" And that he's the guy that introduced me to this shadow. And he was like, "If that's green, buy it. If it's red, sell it. Come back and see me in 6 months' time." And I went, "Jesus, you're right. If it's going down, I sell it. If it's going up, I buy it." What have I done? Nothing. I'm not profitable, but what am I not? A losing trader. Why? Because I'm letting the market move. That was the lesson. The key lesson was stop trying to get in and out all the time. Get in, wait. Yeah. And wait for the market to either make you money or change your mind. Yeah. It's that simple. His mentor taught him to trade in this way. He was an investor, but basically his entire strategy was, when this turns red, I short it. When it goes green, I get out of my shorts and I go long. When it goes red, I get out of my longs and I go short. I get lots of losses when this happens, but when it doesn't happen, I just make a fortune. His short entry, his short trade was that, right? And he held it for 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Now, if swap fees were a problem, imagine holding for 9 months. That's going to cost a fair bit, isn't it? But that's it. But what he didn't do was constantly get in and out and try and get it right. He let the market flow in the direction the market was flowing in. But he understood, and he added as well in these pullbacks, these were add points. Yeah, between the two moving averages as an add point. It's a different strategy, but it's a trend trading strategy. But for me, I couldn't do this because the strike rate was about 23% or something ridiculous. It's awful. Less than 25%. But what it did show me was that this is all that happens. It just goes up and down all the time. You can't predict it. And if you're going to get into it, you need to hold it. And if you're going to get out, if it goes the wrong way, you get out of it. But then I came across position trading methodology and I was like, well, if it goes down and I'm wrong, I can just get out when it goes up, because like you said, that's all it does. So if it keeps going down, I'll wait until it goes back up again. There are instances where it's just going to hurt. But for me, getting hurt once or twice a year is better than getting hurt 50 times a month because I can't get it right. Yeah, it's frustrating, isn't it? Your human nature wants to make money. It wants to be right all the time. That's just us. We are programmed as human beings to not want to get things wrong, because getting things wrong causes problems. This market is manufactured to make you wrong. Every time it goes down, you press the sell button, it goes up, and you wonder why it goes up. It's just because that's what it does. But people can't, for some reason, and I say people, us as human beings, we can't identify this. We can see it, but we can't identify it. For some reason, we still keep putting these orders in to lose ourselves money, although we see it happening over and over again. You take 10 losing trades in a row, what do? Take a bigger one. You just took 10 losing trades in a row. Stop. You got it wrong. You're not good. You're crap. Stop doing it. But you need that wake-up call, basically. Removing the stop removes the 10 losses. And that 10 losses will end up doing that. And you'll get out and you'll go, if I hadn't placed those orders, I'd have made money. And that becomes the light bulb moment for most people. And then it's just fine-tuning it. Yeah, looking at the 38 retracements. Yeah, I see them before. I don't need to measure them now. I just see them. But you will. This is muscle memory. You build muscle memory. You see 100% retracements, V-shaped recoveries. You see all the pullbacks, 50% retracements. Yeah, you just see this stuff after a while because you can't not see it, because that's all it does. All it does is that all the time. This thing will either continue up or it will pull back into here and then continue up that way, or it won't. It will break that low and then it will pull back a percentage of that leg before it makes a new leg down. It can't do anything else. There's nothing else it can do. It has to do one of those two things. Otherwise, it's flatline. You just need to understand where it's going and then have a plan for each scenario. So the scenario is I'm going to buy here because that's my first entry. My plan is to exit there. But if it goes down, my plan is that it will come down to a 61 to 71 retracement. So I'll add another one in case that is what it's going to do. And if that isn't what it's going to do, it's going to come down and touch that low down there and become an A-shaped recovery. So what my plan will be is to do that, have my price there. And then I will assume that when they hit this level, they will rebuy it and we will pull back. Now we will pull back a percentage of that leg. So you get your fib, you stick your fib on the new leg, which has played out from there. And you go, my average is here, 38 retracement gives me a break even, 50 gives me a profit. But my plan was, when I got in, to do that. But I had to change my plan because price didn't do the binary thing that I wanted it to. It did the other binary thing, went the other way. So I just wait for the next binary thing to happen. That's all it is, isn't it? It's binary. Time, price. Two things. That's all it does. But you try and keep predicting where this is going to turn, you will keep getting it wrong. Turned into a bit of a waffle this morning, haven't we? This was a 2-hour session on stuff. Anyway, it's always good. Imagine how much money you will make if you're right. Yeah, but this is the thing. You can't be right. You can't. Even the banks don't know. You know, I know my friend that worked in a bank. He's not. He doesn't know. His job was not to be right. His job was to execute orders. That's the thing. If you're sitting in Barclays right now, you've got an unlimited pot of cash. Pretty much. It's not that. It isn't an unlimited pot, but it's more money than you and I can comprehend that they can put into this to move it. HSBC are also sitting there with an uncomprehendable amount of money that they can move this with. Citibank are sitting there with an uncomprehendable amount of money they can move this with. Barclays don't know what HSB and Citibank are doing. And HSB and Citibank don't know what Dave at Barclays is doing. But what they do know is they've got a load of orders to execute. And because of that, the market will move. That is the constant. Nothing else. So when Dave wants to get all of his orders in, he'll get all of his orders in, or he won't. And if he doesn't get them in, he'll get a different price for them. But he will get them in. He'll just get a different price. And eventually, the guys that are selling and pushing him down here will stop, and he'll push them back up again. It's weight of volume of orders executed that moves the thing up and down. There is nothing. There's no way you can get it right. You can be lucky. And this is all it is. Trading is lucky. Yeah, this is bouncing from here. Or it's not. So if you think it's bouncing from here, looks pretty good, doesn't it? As a range, short it. But if it doesn't short, and if it does short, get out there. Or if you're feeling brave, get out there. Or if you're feeling super brave, get out there. But if you're wrong, get in there and wait for that. But you cannot decide if you're right. They decide if you're right. And whether you're right is based on whether that gets hit or it does that. And if it does that, and that's your target, you're wrong. You're right, but you're wrong. How frustrating is it being right and wrong at the same time? This is the thing that kills everybody. What they do is they adjust their strategy. They go, I'm only going to take support resistance bounces, and I'm only going to target propulsion gaps. And then it moves down to there, and they go, okay, I'm not going to target propulsion gaps anymore because it didn't hit it. I'm going to target a quarter of an ADR. And then it will go down to the propulsion gap, and they'll go, oh, I shouldn't be targeting a quarter of an ADR. I'll target. What you're doing is you're changing your strategy every single time you do it. Don't have a strategy. Have an entry, have an exit, and just sit and wait and see if they give that to you or if they don't. If they don't give that to you, get the next one. They're buses, they're trains. They just come along all the time. It's just the way it is. AZ just dropping in during work. We're waffling this morning. Sorry, it's not a structured session today. US dollar CAD really testing my patience. I should have taken the exit from the election. And this is the impossible bit to teach. And it's the impossible bit to do. You know, I say teach, I don't know. I haven't got a clue. I got out here because I had an exit. I engineered an exit for myself. My exit could have gone wrong. My exit could have been twice as good. But the only reason I had that exit was because I took a shed load of drawdown control loss, which got my average. This is the drawdown control bit that I struggle with to explain to people. And I think it's just the thing you have to do. But that exit for me was generated by taking a load of loss. My average was too far away. I needed it closer because the election was coming up. So I caned a load of loss, took a hit to get my average to a place where I could get out with a profit. I managed to make enough profit to negate 2/3 of my losses. That's it. It's a losing trade. But how I got out of it was me. And that's the thing that there isn't a rule set. Look how close these positions are together. This is super aggressive, super risky. But it's also me seeing this rollover happening and knowing that we've got an election coming up with an immense rally. But this is just because I've seen this stuff before. And like I say, the muscle memory thing is incredibly important. If you open the strategy tester using the position trader EA and just get in, press the start button and just take trades. Yeah, just trade. What this does, hello? Oh, I haven't got the buttons turned on. But what this exercise does is it, why is the buttons not showing? Weird. Don't know what that was. But, you know, just zoom out and just trade. You know, when you see something happening, buy it. Yeah, didn't work out. Got a profit. Take it. Sell it. Didn't work out. This is probably going to take an automatic trade for me, isn't it? But anyway. And just do this and see what happens. I've got almost a break here. Now I go profit. Take it. Wait. I know where this is going, so it's a bit cheating, but that's a pretty good place to sell. They sold it there. We had a bit of an accumulation. Didn't work out, so we'll take another one. But just do this, and what you will see is the price going, holy crap, look at the size of that move. That's got to come down. Because they can't go any further, because there's just not enough people left to sell to them. They're all gone. So get out. Whenever. But if you do this experiment, the problem is you are going to convince yourself you're amazing by doing this, because you are, because this is what the market does, and you've suddenly realized this is how you make money. But the problem with it is this has taken 1, 2, 3, 4, 5, 6, 7, 8 days to play out. Yeah, I made nice money there in 8 days, but that's not how it works in the real world. We sit here for 8 days. It takes 2 weeks of live streams for us to make a tiny bit of money, doesn't it? Not moving at the moment, is it? What time are we? I mean, it's 2016. I've got no idea what's happening because we're in 2016. I thought that was the intervention. It's not. So it's probably going to go long, isn't it? So let's make it hard for ourselves. Let's sell it at that high. We've got a big area of accumulation coming up. Oh, made money again. Do you see how hard it is not to make money? I've done this experiment before in live rooms. And when I first started, when I first built the price action toolkit, I did a load of sessions like this and did this type of trading and showed people how hard it is to actually lose money trading. If you forget about picking the highs and the lows and you just get into the market, it's really difficult not to make money because by default, the market goes up and down. So if you just change the price slightly from when the market has gone in one direction, it will come back down into your direction at some point because that's all it ever does. This builds that muscle memory. This shows you market structure. Yeah. Nice range. Break. Break. It's coming down to here. There you go. There it is. Close. I'm not saying it because I've got a crystal ball. I'm saying it because this is all it ever does. It comes back to previous levels it tested. The sellers lost. They became like buyers. When we get back there, they buy again. Because that's all that happens in the market. The banks are always in the market, long or short. So if the market's going long, they're long. When we get back to the point that they were short, they add more long. If they then get overpowered, they flip short. It's all they do. All the time. God, that's a big drop. Buy that. Because it's going to come back up into this area. It's going to come back up into there probably. But I don't need it to. I just need to make money. See what I mean? It's too difficult not to make money when you do this. Ooh, RSI. But if you do this in the back tester, use the position trader EA in the back tester, you will build this pattern into your retinas, and you will just see every single one of these is a fib retracement. That is a 71.9 retracement. That is just over a 71.9 retracement. Yeah, that is obviously an A-shaped recovery. But we got this big leg down here, which did a what? 23.8 flag break. You will see this over and over and over again, because that's all it ever does. It does one of three things. Pulls back a little bit, pulls back a fair bit, pulls back a lot on its way to the next destination. Or it decides, I don't want to go any lower than that. I'm going to go back up here, and we're going to go that way instead. But it will always do a fib retracement. So when you're targeting something short, look at where it's pulling back to. But you'll never predict which one it is. But that's why position trading works. We don't need to predict which one it is. We just need to get in and then wait for the market to prove us right. And then it will sit around like this and do annoying stuff, and you just go, sod it, I'm out. I can't bother with that anymore. But what have we not done? Lost. No, I've never even seen 2016. I wasn't even trading this 2016. I don't even know what this price is doing. But I'm not doing anything clever, am I? I'm waiting for the thing to have dropped dramatically or rallied dramatically, and I'm going, that's going to get exhausted soon. Elastic band theory. It's the whole purpose of the position trading bootcamp, elastic band theory. And that is what I learned from my mentor that showed me this chart. Yeah, because all these moving averages are the elastic band snapping over and over and over again until they stretch it the other way and it snaps, snaps, snaps. That's all it does. So if its elastic band is stretched, you just wait for the snap. But the snap can come here, 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 or here. You've no idea how far they're going to stretch it before they snap it. That was a big one. That was the war kicking off. Is it? No, I don't know. I don't know what that was. Doesn't matter what it was, does it? God, I'm even trading a 30-minute chart. Look, I never trade 30-minute charts. Don't even have a 30-minute chart. I do, but I don't. But go and do this as an experiment. You know, just sit here for an hour on tick mode. You can adjust the speed of it. You know, make it faster, make it slower. But stick it on full whack and just press buttons. I've no idea if this is long or short. It's the middle of a range. Let's go long and see what happens. It's either going to go and pull back further up into this area, or it's going to come and test this low. I don't know which. It's not a very good trade. But it doesn't matter, does it? Because the outcome is going to be one of those two things. I just need to wait for one of them to happen. Time. At the moment, nothing's happening, so I can't be bothered with it. I'll get out. I should have stayed in. Yeah? Do this. Try it. It's very hard. Like, it's very hard not to make money. Look at this P&L. I haven't even got a strategy. I'm pressing buttons at random. Look, that's all we got to do. Hopefully that's been useful this morning. Sorry it's not what I had planned, but it should be useful. I still haven't got any trades on. So, you know, that sort of thing that I've just been doing, you started catch running again, look, is the sort of thing that I will do if I don't get any decent setups in line with swaps. That's the sort of thing that I'm going to be doing. I'm literally going to be hitting the button and getting in, because I need a reason to get in. If the RSI is not going to give me what I need, ADR is not going to give me what I need, I'm just going to use the buttons at levels of support, resistance, and propulsion, because there is a high probability of those becoming bounce points of some distance. That's it. That's all we're waiting for. I'd much rather we had a stretched market, but my stretched market really just does now need to lie in line with this, because this is just costing me too much money. So right now I love this as a long, but if I'm wrong and I hold this for 6 weeks, it's just going to make me lose money. US dollar CAD, if I hadn't been paying negative swaps on it, I'd have been out much better, much better off. Thousands and thousands and thousands of the loss that I took on that would have been eradicated if I had have just gone long. Not because I would have got it right. If it had squeezed me in the opposite direction, it's just I would have not paid that. It's quite critical now, I think, but we will find out if I can get any signals. Nice little profit building. But we'll come back to these this week and we'll see how they're going. Yes, I need to get slapped too, yeah. Any other questions? Anything else you want to discuss? Speak now or forever hold your peace. I haven't got anything planned at the moment for Thursday. So what I'm going to do, I think, is I was planning to build out that support resistance EA again, but it would turn into a position trading type strategy anyway. So we can kind of do it with the position trader EA at the moment. So maybe that's in a thing that we can do on Thursday, is just kind of do some drills, if you like, for position trading drills, a little bit like what we've just done in this session now. Just look at support resistance levels and start trading them. Obviously, we can speed up the back tester a little bit, but that's something we could do. Or I've got other sessions I've got sort of planned on subjects, if you like, but we've covered virtually all of the big things in the member streams already. So the daily strategies that I was planning to develop out, I've already built some of them, and I've done some testing on them. Like the smash day strategy, for example, if you're familiar with Larry Connors, it's one of the Larrys. I think it might have been Larry Connors, might have been Larry Williams. The smash day strategy, that's on an hourly chart. That's not going to work. But I've been testing the strategy, and it does work. However, it takes, on the testing that I did, somewhere in the region of 20 to 30 trades a year. And for the reward that you get from doing it, you just don't make enough money, I don't think. And tagging a load of these types of strategies together, which was my plan, now I've tested them again and looked at the profitability of them. They're profitable strategies, but they just take forever. And I think that the issue with this type of strategy now, you see that one just took a loss, is swap. So with these types of strategies running on forex, you have to trade them in both directions. If you just trade them in one direction in line with swap, you're going to take even less strategies. And for me, getting into 20, 25 trades a year, even if I had 5 good strong strategies, and a lot of these strategies are very, very similar, they're all based on extensions, like 3 days in a row, 5 days in a row, smash days, these sorts of things. They're all doing the same thing, really, waiting for extensions in the market and mean reverting them. They're all mean reversion. Even if you couple 4 or 5 of those together, you're going to make less money than you do position trading, because even with low risk, because the amount of time these trades take to play out, like this one here is a great example. 5 days we've been sitting in this to make that much money. Euro US dollar. What's the swap on the Euro US dollar at the moment? 9.30 to go long. So that trade that we just seen playing out there, you've been paying swap fees on that. It just doesn't work anymore, I don't think. They do work, but they don't work enough. Yeah, we've been trading a long time here, but it just doesn't work enough. So I'm not sure they're worth really pursuing in any detail, because there's an awful lot of work involved in programming them out and testing them. And the testing that I've done just hasn't produced enough profit. There's plenty of other ways to make money out the market with daily strategies, like the ones we're looking at the moment, where you trade every single day based on a rule set, or multiple times a week, I should say, not necessarily every day, based on a rule set that produce pretty much the same profit. So, you know, it doesn't look, we're sitting here waiting for trades to kick off. Weeks are going past. We're not trading. It's not a fun strategy to trade. And not as profitable, I don't think, or as profitable, but just not, you know, not any better. No point in doing something if it's not any better. So I'll think of something else to do on Thursday. So if there's any ideas you've got that you want to cover on Thursday, let me know, and I can do something. Or if you just want to do drills, price action, trading, that sort of thing, anything, you know, we can do anything you want, but I'm happy to be led in a direction, and we can go from there basically. But if no one comes up with anything, I will plan something. But that's really it for today. So I'll be back on Thursday. I'll be back tomorrow. Tomorrow afternoon is the session tomorrow. It's Wednesdays, so we're doing an afternoon sesh. FTSE is in profit. 4-hour break to the downside. A bit of a lucky one, that one today, that actually did stop out. So I've taken 100 loss, 200 up. So I got £100 profit. I'm just going to grab that. See what I mean? Half of trading is luck. I was lucky that stopped out on that half today. No skill involved in that. I just waited for the market to go in a direction that made money, and I took money. Yeah, it's not very little skill involved, is there, in this job? People call people skillful traders. Lucky, I would call it. So that's it. I'll be back tomorrow afternoon, 2:30 as usual, and then Thursday morning we'll do another session, and I'll plan out what that's going to be. But any question, anything you've got, chuck it at me. Froggy, by the way, if you're still here, this is the spreadsheet you gave me. It's only got one sheet in it. I don't know, you might have replied to me. I haven't looked, but yeah, doesn't seem like you sent me the right thing. Right, I'll be back tomorrow. Have a good day. Anything you need, I will see you in Discord.